Good morning, everybody. Welcome to another episode of Vietnam Innovators. I'm your host, Hảo Trần. Thank you for tuning in every Tuesday, wherever you find our content, on Spotify, Apple Podcasts, YouTube, Facebook, on our website. Thanks for supporting the show, as always. We're in the midst of season 3. As you can see, we're still in our brand new studio, and every day it's changing. So hopefully, over the next few episodes, you'll see it really come to full fruition. In the meantime, as we're quite pleased to welcome a new guest here on the show today. His name's Carson Block. He's the Chief Investment Officer and founder of Muddy Waters Asia. And Carson, before you introduce yourself, I have to ask, why the name Muddy Waters? What is it exactly?
Well,
leading to?
So it's a reference actually to a Chinese proverb. And I don't know if there's an equivalent or Vietnamese version of this, but the proverb is 浑水摸鱼, which in Mandarin means muddy waters makes it easy to catch fish. And that meaning might not be readily apparent, but effectively it means that opacity creates opportunities. And so when I started this firm, it was back in China in 2010, and we had observed in a situation, one company, where they were using the opacity of being listed in the US while being based in China, the cultural barriers, different legal system, to defraud American investors. So thought that was a very meaningful or apropos name for this business that we started.
So it sounds like you guys, well, let's introduce what Muddy Waters is too.
Sure.
And thank you for introducing that proverb. That's a very beautiful one, actually. And I think it's highly relevant to Vietnam today as well, in terms of not a lot of people understand the market from outside, even from within sometimes. And it's up to a number of players to kind of showcase what's going on here. So Muddy Waters, what do you do and why Vietnam?
Well, so historically, we've been described as activist short sellers. So that was an industry that we actually helped to create. So basically what we were doing up until recently, we were exclusively doing this, is we were identifying companies where the management was misleading or outright defrauding shareholders. And we were taking positions in the stock, but we took positions where we were short the stock, meaning that if the stock went down, we would be selling high and then buying low and making money that way. So we would short the stock, and then we would go public with our research and explain, this is why we're short the stock. Here's how management's misleading you or they're committing fraud. So that's what we started back in 2010. The business was actually almost accidental, to be completely honest. In 2015, we turned it into a hedge fund. So we took that existing activist short selling model, and then we raised outside capital. And so that's what we take the short positions with. And then about 2 years ago, we started thinking about how the world was going to change its relationship with China coming out of COVID. And we also really wanted to start going long in some capacity, but we didn't want to just go long tech like everybody else was doing, and it seemed massively overvalued. But we came upon the business plan of setting up in Vietnam to be long equities in Vietnam, because it became clear to us, or I should say that our thesis, which we have high conviction in, is that Vietnam going forward is going to be a significant beneficiary, probably the biggest single beneficiary relative to its economy and its markets, of the world's further detachment or disengagement from China and redirecting FDI flows away from China.
So you guys are part of that wave. You guys really built the business in China. You're an example of that, actually.
Yeah.
And you've seen it progress in the last couple of years. You're looking at new markets. Vietnam seems to be one of the primary ones for you guys.
I mean, it really is a continuation of when I lived in China a total of 6 years. First time I lived there was 98. Then I moved back in 2005 as a lawyer, and I ended up opening the first self-storage business in mainland China. And then I left in 2010, right after I started Muddy Waters, because it was apparent to me that it would not be good to be in China while exposing frauds from China.
Sure.
And, really by the time that, I'd say by 2007, I had become somewhat jaundiced about China.
Okay.
And I actually co-authored Doing Business in China for Dummies, which it's It's actually more sophisticated than a typical For Dummies book. It's really an FDI primer on China. But I felt like China was this massive open secret that people outside didn't get how dysfunctional it was. And so, I've been tremendously disappointed in China. I mean, I had so many friends who were Chinese, have a lot of respect for the Chinese people, but just the country went wrong. And so I feel like Vietnam is positioned in a way that's different, positioned to do things well and really benefit its people and create a society that's just much more positive than that of China. So that's basically our being here is effectively a continuation of that disenchantment that I experienced in China late in the aughts.
And stepping back a little bit, Muddy Waters, you guys have outside capital to manage, probably a little bit of your own as well. In terms of the kind of money that you guys are managing, is it American? It seems like mostly American investors who want exposure to a place like Vietnam, but they don't know a lot about it, so they're working with you, right? What's the overriding kind of understanding of Vietnam to this day, coming from the States? So for those listening, Carson lives in Texas, visiting. He has a partner here and based in Vietnam, running Muddy Waters. But what's the perception of your colleagues in the U.S. when you say you're investing here?
Well, it's a little. I mean, they're surprised because number one, there's something out there that we like, since we're known for being so skeptical and cynical about things in general. But so I'd say that's the first layer is like, wow, there's something you actually want to buy. And then the second layer is why Vietnam? And I explain this thesis that, again, we've had for 2 years about how the disengagement with China, prior to COVID, I mean, the U.S. was disengaging from China somewhat. I mean, China is not going to go away. It's still going to be a major player in supply chains. But COVID, what I saw in end of April of 2020, COVID, I think, really alters the world's calculus with respect to China. I mean, it does with supply chains in general, but especially with China. And so that's, so really Vietnam is a natural recipient or beneficiary of the redirection of flows. And so I explain that to people and they say, yeah, that's interesting. And the other thing is, because we're establishing an on-the-ground presence like we used to have in China when I started Muddy Waters, we should be able to cut through the opacity. I mean, it's a very difficult market to understand from the outside. I mean, there are various reasons, linguistic, cultural. It's classified as a frontier market right now. But it's also, interestingly, it's a fairly similar governmental and legal system to that of China. And we're very comfortable, obviously, with that. And we've done work in a lot of other emerging and frontier markets over the years. And so we're very comfortable in these places where there are these significant information asymmetries. And so, but really, there's no magic wand you can wave. You have to do the hard work. You have to have boots on the ground. And so that's why we have our presence here now.
You mentioned as a firm, you haven't rode the wave of the tech stocks necessarily. They're overvalued, and we're clearly seeing that right now. In regards to what you do invest in, I don't believe you've really mentioned that yet. Are they more traditional kind of businesses? If so, what are they, and what make them exciting? Well,
so to be clear, the vast majority of trades we've ever executed as a firm have been shorts. So last year, for example, we went short early in 2021, just after the GameStop and meme stock craze. We went short a pretender electric vehicle company called XL Fleet. And I think we shorted it at 12 or 13. And basically the thesis there, the research that we did was speaking to former employees who said, listen, this company, when it had gone public via SPAC, so going back to 2020, after COVID hit and the Fed just jammed all this money into the markets, and all these retail investors enter the market for the first time, anything that sounded like it could be the next Tesla, it just ripped. And so there was a way of going public in the US by SPAC, Special Purpose Acquisition Corporation, that avoids a lot of the due diligence and scrutiny you get with an IPO. Now, it's worth caveating that the due diligence and scrutiny you get with an IPO is woefully deficient. But if you take something that's pretty close to abysmal to begin with and say, well, this is a much lighter touch version of it, you obviously have an open door for grifters to come in. So this company had gone public and saying that its last full year of revenue had been $7 million. That was 2019. And so they were projecting that in 5 years, they were going to do $1.4 billion of revenue. Now, from 7 to 1.4 billion in 5 years. Now, it's usually hard to disprove somebody's predictions of the future, but the way that they established that this was their realistic revenue path, they said, well, we have a pipeline right now of $200 million worth of orders. And they threw a bunch of corporate logos out there on these slides saying, these guys are customers, Coca-Cola, large companies. So we spoke to formers, and formers said, actually, no, that pipeline, I was in sales. That pipeline isn't real. I would have a conversation with a company that clearly had no interest, and my manager would say, put them in the book as a likely order for this many vehicles, and said that was pervasive. So that 200 million pipeline was just, it was a mirage. We spoke to some of the purported customers. Like, we tested one of their vehicles, didn't get any real savings in terms of fuel, et cetera. So we have really no interest in ordering these things. So that was basically what we went public with in terms of our thesis in February or March of last year. And so again, I think the stock was it was north of 15 or 16. Today it's, it trades below cash. Actually, it's like $2-3 a share. Okay. So it's been a good short, but that's generally what we've done. The last thing that we did on the long side, though, was in mining. So it's public that we were long this one junior miner in Canada, and it was a great investment. I think we roughly 5x'd it in 18 months. So we like these things that are hard to do, hard to research. We thrive on information asymmetries, hence the Muddy Waters mantra and name.
So when you say information asymmetry, what's your secret sauce? I mean, it seems like it's fairly dependent on a very rigorous research process, people on the ground, just asking a lot of questions, knowing where to look. Is it as simple as that?
When I think about it, it's actually kind of simple because you're not reinventing the wheel, generally speaking, when you do this type of research. I mean, yes, in the past, we've done satellite imagery of open mine pits in Africa or of metal reprocessing facilities in Mexico, and done drone overflights, some undercover stuff. Like, we've done some things that are kind of sexy, but by and large, it's pulling government filings. So every jurisdiction in which there are significant operations, we see what kind of data is available from the government. We pull it. We talk to formers. We love having people talk to, say, security guards at facilities. Just how many trucks a day come in here, come in and out every day, because we would calculate that should be about 150. And sometimes the guards will say, like 5 trucks a day. And, that's significant. So talking to suppliers, talking to purported customers, it's just a lot of legwork. So it's generally not rocket science, but you do have to have some sort of understanding as to how material and people move throughout these things to know what are the checkpoints at which you should really dig in and take a look.
So you take that practice and you, in Vietnam at least, you invest long here. Right. You buy. Are there short activities in Vietnam?
No, we anticipate nothing on the short side in Vietnam.
Okay. So on the long business, what are you looking at? If you're able to disclose anything.
Yeah, I mean, I can't go into specifics at this point in time, but really a lot of what we're looking at, these are businesses that are pretty basic businesses. I mean, in contrast to the United States with the technology dominated market. So kind of basic materials manufacturing businesses, some banks, although not necessarily in love with the idea of being long banks. But basically, we're looking to capitalize on the growth of Vietnam. And the main thing for us is avoiding any really problematic companies. So looking for things that are not ridiculously priced, that are growing reasonably well, that cash flow or have prospects to cash flow soon, are reasonably well governed, and don't seem like they present a real blow up risk.
You say well governed. A lot of people from outside they struggle because of the cultural, linguistic barriers, lack of content, perhaps about Vietnam in general. It's changing, but it's still a work in progress. How do you evaluate some of the operators at these companies? Do you find them to be, when I say like entrenched Vietnamese, I mean they haven't had a lot of exposure from the outside, and they might be like, oh, why is Carson coming to us, right? Or do you find them to be a bit more open and very eager to do business with international folks?
In general, we found the companies to be pretty open to engaging. Our name can occasionally carry a little baggage because many of these companies have heard the name and they think, uh-oh, like, are these guys here to look for wrongdoing, which we're not.
Yeah.
But basically, most of the companies have been open. Some, some are just not really ready to engage with investors. But it's not, it's not that bad a situation. It's kind of funny because if you contrast Vietnam, which is obviously capital markets are very new here, to Japan. I mean, Japan, it's really difficult to engage with managements. Probably, and I haven't done stuff in Japan for a while, so maybe this is an overstatement, but I feel like it's a real minority of company managements in Japan that will engage with investors, particularly foreign investors.
And here, is it the majority, or to be seen?
Well, so look, there might be a selection bias. I want to say yes, I feel like it's a majority, but the selection bias is we're starting with numbers, right? So you have to have good numbers. So companies that are well governed, all other things being equal, are going to have the better numbers than companies that are not well governed. And yeah, when we approach them, we have to go through local brokers who will arrange the meetings, but companies have generally been receptive, and they do seem like they are eager to talk to foreigners and even get feedback from foreign investors. Doesn't mean they're going to wholesale change their practices, but the impression that we've gotten is that a lot of managements are really eager to hear feedback. Like, what do you think of this idea? Would raising capital in this way make sense? And that's great. I mean, from a foreign investor's perspective, that's, at the end of the day, it's the company's decision, but it's great that they are open and willing to listen to our thoughts.
And are these companies in the Vietnam context publicly listed or private? Yes.
So what we've looked at here is almost entirely public. At some point, maybe we'll add privates to the book, but we're really here to build a business based on publicly traded equities. And also right now, what's going on with the private market overseas, that will have knock-on effects, I'm sure, the private markets in Asia, including in Vietnam. So I'd want to wait and see how the dust settles there as well.
Do you find, based on the research that's available out there right now, content, whatever you want to call it, is it helpful? What kind of gaps are there?
The disclosure quality in the accounts can vary. So some firms will have better disclosures, others trying to figure out what's going on. So that runs the gamut, and part of that's also based on the inherent complexity of the business. So businesses that are just have more moving parts to them, or a company that has more divisions, it can be harder to really show in the financials and the notes to the financials what's going on. But it's the disclosure quality is, it's not bad. This is a frontier market. We're not going in expecting SEC regulated levels of disclosure. And in terms of getting other sources of information, brokerage firms have been helpful. There's a lot of research that's written on these companies, and the research is of decent quality. We're normally, when we think about our core business of activist short selling, we're normally very skeptical of investment bank brokerage firm analysts. They're seldom going to say things that are critical or skeptical of companies because it's just not the business model of the brokerage firms. But yeah, here we have found some of the research to be value added. So that's helpful. It's not the sort of thing that everybody can access because you have to be trading or about to trade in significant quantities to get it. But also right now there's a relatively small network of foreign business people here in Vietnam, and some of them have a lot of insight into various industries and players, and that's been very helpful. So that's actually, that is an important point to emphasize. If somebody's outside Vietnam thinking, I might find Vietnam interesting, but how difficult is it to get information? We have found that, again, it's a relatively small business community, which is good because people are accessible and they're willing to talk. So we found people willing to engage, and that's helped us a lot also.
A few weeks ago, I was at a German Business Association meeting with two other pretty prominent private equity kind of asset managers, or they have been in the past. Dominic Scriven from Dragon Capital, Horst Geike from PAG, and formerly Vina Capital. And they were telling me 20 plus years ago when they first arrived, the market was too small for both of them. They said jokingly. Obviously, it turned out fairly well for both of them. Now, there have been additions. I can't say too many, but the amount of money being managed in Vietnam has definitely increased. But one of the big hurdles is still, you mentioned it's a frontier market. So for a lot of international folks, they're looking in, they're like, well, it doesn't even pass the first test. So it's not an emerging market, so we can't even look at it. What do you have to say about that? Is it well, obviously you're here, but what do you have to say to those folks from abroad that still might look at the market and be like, it's too early, there's not enough funds here, why bother to come in? What are your thoughts about that?
Well, a lot of foreign investors do have mandates that, in this case, would prohibit them from investing in a frontier market. So that's true, but it's believed, we believe that Vietnam is pretty close to that upgrade to EM. It's not going to happen tomorrow, but within the next couple of years. So when it is upgraded to EM, there's obviously a much bigger pool of assets that could be allocated to it. Now, the other thing is right now, what we found in talking to some of our existing investors and potential investors about Vietnam, there's a good deal of interest. And I think there would have, even absent what's going on in US and developed markets right now with a lot of the high-flying stocks just crashing. Even absent that, I think there would have been interest. But really, right now, there's a paradigm shift in investing in developed markets underway. So you can look at, the financial crisis is one bookend. That's when monetary policy, the West began quantitative easing, which we used to laugh at Japan for doing. Oh, this just doesn't make any sense. And that's exactly what the US and EU began doing right after the financial crisis. So that's one bookend. And then the other bookend from that paradigm basically ended, I'd say Q4 of last year. And so now we're seeing the corrections in asset prices. And some of the funds that were just the superstars of the past decade have lost 50% or more of their clients' money in just the past 8 or 9 months alone. So you have a lot of allocators, so the people who control large pools of capital and look for managers to manage them, wondering, what do I do? And the thing that's also kind of interesting about that, and I kind of joke about it sometimes because I've been involved in the market since a very early age, and I got my brokerage passed the Series 7 brokerage exam in the US in 1995. So I've seen some cycles here. A lot of the people who are involved in managing risk just haven't seen anything other than the quantitative easing era. So for them, this whole buy the dip paradigm was just the only thing they really know. And there's still a lot of muscle memory that has to be trained or out of people in order for them to start, I think, successfully investing again. But the point that I'm circuitously making is there's a realization now that assets have to be reallocated, and among, at least especially the older generation of allocators. So they have to allocate them differently than they have been. And that's one of the reasons why I think we've gotten, at least what we perceive to be, a very warm reception when we're talking to potential investors about a Vietnam product is, this is a different world, and what they're saying makes sense.
How does Vietnam, it's more of a technicality, but how does it get from frontier to emerging? Because people that live here, they see like, whoa, what are you talking about? Like this is the clear indications that this place is much more than a frontier market. Well, from a technical point of view, what has to change?
So when in the investing world, really MSCI, Morgan Stanley Capital International, no longer part of Morgan Stanley, but MSCI it's the index determiner, or it determines these indices. And so MSCI classifies Vietnam as a frontier market. So basically, I mean, I think the criteria have to do with liquidity and combined market caps, probably some other criteria as well. But when MSCI decides that Vietnam is now an emerging market, no longer a frontier market, then from an investing perspective, it will be EM. And you get, and when I'm talking about those indices, that's also an important point, because a lot of the money that's allocated out to developing markets, whether they're FM or EM, it's through passively managed funds. So these index funds, where there are these fund providers, the fees are very low relative to active management. People like ourselves who are picking what we buy and what we sell. And so they just put money into these index funds, and the pool of money that's allocated to emerging markets indices versus frontier markets, it's just much larger pool of money. So there could be, now to be totally clear and set expectations, it's possible that once Vietnam is upgraded to emerging market status by MSCI, there might actually be net selling by foreigners for a little bit, because the frontier market, Vietnam's a reasonably decent size in the frontier market index. When it becomes an emerging markets country, it'll be one of the smaller countries in the index. This is one of the things I've been discussing with people as I've been here this week, and people who are here and in the markets, I have had some pushback on that. So I might be overstating the possibility that there could be, a temporary sell-off when that happens. But I wouldn't be that upset, because for us, I mean, we expect that especially at that moment when it's upgraded to EM, we're going to have an even easier time raising assets. So if that gives us some buying opportunities in the short term, that's a great thing.
Carson, how does someone that's listening to today's podcast get in touch with you guys? You have a couple staff here in Vietnam.
Yes.
Robert is one of them.
Yes. Robert Med is heading up our Vietnam effort.
So anyone that's looking to just learn from you guys, share insights, potentially even pitch you guys, I don't know if that's a consideration. How do they get in touch with you? Is that something you want to be done?
Yeah, that's an interesting question. And the reason why I'm equivocating on answering that is because we're a fully SEC registered investment advisor. And SEC so technically hedge funds are called private funds. So I'm not permitted to market because to invest in our funds, you have to have a network. Well, actually, it's even higher than that. So you have to be what's called a qualified purchaser, which means on an individual level, net worth of 5 million or more. So that puts me in a weird situation where when I go on TV in the US, I'm not permitted to discuss historical performance numbers or anything like that. So, but look, I would say we have MuddyWatersCapital.com. It's just a placeholder website. So that's different from Muddy Waters Asia, but MuddyWatersCapital.com, placeholder website, but there's a contact form there. So if somebody's interested, they can do that. It'll go to us at the firm and we can respond to inquiries that way.
And are you guys hiring as well?
We will be. We're taking things a little bit slowly. We're doing our trading and our operations out of the US. So the Vietnam side is just a research side, but we will be scaling up here on the research side at some point.
Great. Well, the likes of, and for those listeners, I'm probably sure that you're well aware of the ones that are active in the market, everyone from Mekong Capital to Dragon Capital to Vina Capital. They've been here for ages, but it's time for some fresh new faces, new strategies and insights. And we're hoping and wishing the best for Muddy Waters.
Yeah, thank you. Look, we think a rising tide will lift all boats. If we don't, it's a growing pie. This is not going to be us scrapping for a bigger piece of a fixed pie against the established players. So, and our hope is that because we're a very well-known investing brand outside of Vietnam, or well, in Asia, but also especially in the US, our hope is that our commitment to Vietnam will get people interested, allocators interested, and that will help grow the pie overall.
Excellent. Well, Carson, thank you for joining the show. And to our listeners, thank you for tuning in for another episode of Vietnam Innovators. I hope you learn a little bit about what Muddy Waters is doing, what their views on Vietnam are, and some insights into the capital markets. That's it for us today, and we'll see you next Tuesday. Thank you, Carson.
Thank you.
With a comprehensive healthcare ecosystem, GeoHealth integrates technology to optimize the examination experience for their customers. The Geo Smart Clinic provides a multi-specialty clinic experience with a team of elite doctors and cutting-edge technology. And with their recent Series B investment of up to $20 million, GeoHealth is coming closer to expanding their smart clinic system nationwide.